Hey guys, welcome to today's video. Okay, so in today's video of Ultimate Beginner's Guide to Forex Trading, we will be looking into the time frame and the market trends. Alright, so in this video, we will be looking at a few things that is very important for you to kickstart your trading journey, which is what is time frame, the types of time frames used, understanding the market trends, the types of market trends, and yes, so what is a time frame? So time frame is actually a period of time takes to complete a candlestick. Remember the previous video I showed you the types of the charts. So one of the chart is candlestick, right? So time frame is actually a period of time takes to complete a candlestick. All right, so high time frame is equivalent to low risk. So which means when you trade in a higher time frame, the risk of you losing your trade is very low. All right, so low time frame is high risk. Okay, so some of the traders out there, they are those who are professionals, I mean, all right, so they use a very low time frame to actually place their trades. Okay, which means they go in and they quickly come out. Okay, that is a high risk, but then if you do your analysis right, you make good amount of profit. All right, so technical analysis is best plotted in a high time frame chart. All right, so looking into the types of time frame used. Okay, so M1, okay, is equivalent to 1 minute, M5 5 minutes, M15 15 minutes, M30 30 minutes, H1 1 hour, H4 4 hours, D1 is 1 day, and week 1 is 1 week, and the final one is MN is equivalent to 1 month. Okay, so where do you find all this time frame? Okay, so you can also find this time frame in tradingview.com or the MetaTrader that you will be using, which I will explain to you on the later videos. Okay, so this is the time frame which you will be using for you to see the movement of the price according to the period. Right, so understanding market trends. What is a market trend? Okay, so bullish market is an uptrend and bearish market is a downtrend. So which means uptrend and downtrend. So bullish market, which means the price is going upwards. Okay, it's on an upwards movement, and it is at an increasing price. Whereas the bearish market, which means the downtrend, whereby it means the price is moving downwards and it is at going in a lower price. Okay, so the sideway is actually where the market tests the price momentum. I would say it is actually testing the market, so it doesn't have a constant or a steady way to move. Okay, it's just constantly testing up and down. Okay, I'll show you guys that later. Okay, so the best way to determine the market price movement is by using the way these animals attack. What are the animals? The bull and the bear. Okay, so how does a bull attack? Okay, so a bull attacks from bottom top. Okay, so this is what I meant by the uptrend. So the price which keeps moving upwards. Okay, and how does a bear attack? From the bottom top. All right, so this is where a bearish market represents. Okay, so a downtrend basically. Okay, so it is coming to a lower price and moving downwards. Okay, so a bullish market, which is also known as an uptrend. So what is it? Okay, so this screenshot from TradingView is actually from a candlestick chart. Okay, so this shows, if you can see over here, I don't know if you can see my mouse movement. Yeah, all right, so this, if you can see here, all the price is moving all the way up. It's coming down a bit, all the way up. Okay, testing all the way up, up, up. Okay, so this is basically, you see it's moving on the upward. So this is a sort of a uptrend. Okay, so the price moves upwards, increasing price. Okay, as you can see the arrow, it's moving all the way up. Okay, so when you place a buy trade at this particular level down here, all right, so you will be making a solid amount of profit when the price reaches at the top. Okay, so do not ever place a sell position at this type of a trend. Okay, like I said, do not place a sell entry. Okay, let's look at the bearish market, the downtrend. Okay, so for example, this, okay, where's my mouse? Okay, so this is example from the same tradingview.com, which shows the price is moving downwards. Okay, so the price moved downwards, decreasing in price. So if you can see the arrow, the price is moving all the way down. If you place a sell position at this particular trend, you will make profit, and do not place a buy entry. Okay, so sideways. What is sideways? Okay, so this is an example of a sideway. Okay, so this type of movement in the market is known as the sideway. Okay, meaning this price is not following the trend, but is actually testing the market. It just moves up and down as many times as it could. All right, so entering a trade during this type of movement is known to be a high risk for a rookie trader, as which means a beginner. All right, so as a beginner in forex trading, you would not want to place a trade during this entry, during the sideways, which is also the market testing. All right, so like I said, the price is not following the trend. Okay, you can see it's moving up and down at the sideways. Okay, the price is actually testing the market. So when there's a breakout, it's either the price goes up or price goes down. Okay, so the best time to plot your analysis for you to look into where will the price move on the next breakout. So how to plot this analysis, this is very important, guys. I'll show you this on a later video. All right, so this is a high risk to place an entry. So with that being said, let's do a quick recap. So time frame, time taken to complete a candlestick. Okay, high time frame, low risk. Low time frame is a high risk. All right, so there are three types of market trends. Bullish, which is known as uptrend. When you buy, you profit. The bearish, which is the downtrend. If you sell, you profit. Okay, and the sideways, the market test, and this is the best time for you to do your analysis.